Hey guys, how's it going? It's Andy from MagooInvesting. Happy Wednesday. In today's video, we're going to be talking about video game stocks, and the inspiration for this video is the fact that the next generation of consoles are coming out this week. The new Xbox came out, I believe, yesterday, and the PS5 is coming out tomorrow. So in today's video, I wanted to talk about all of the video game stocks that I think about as being great buys going into this new life cycle. And so what that means is I am going to be talking mainly about console games, the stores that will be selling it, and the manufacturers of the consoles. And so I'm not going to be talking about mobile game publishers, stuff like Zynga or Gluu, even though I will be talking about Zynga specifically this weekend as it was requested for a video. Speaking of that, if you missed the last video, I'll link that above right now. But this weekend, I'm going to be doing a large breakdown of a bunch of stocks that you guys want me to talk about. So if there's a stock you'd like me to go over in a video this weekend, let me know in the comment section down below. Also, since yesterday I had some of the highest engagement that I've had in a while, why don't you just give me a fun fact that kind of makes you smile at this point? Since I am a biologist, I will give you a science fact. There is one species that is considered immortal, and that is a type of jellyfish that, unless it's eaten, it will live forever. So that's my fun fact, and I'm curious to see what fun facts you guys have in the comment section down below. So before getting started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, I'm really appreciative of the like and subscribe button, as it would help my channel out a lot. With that out of the way, let's talk about some video game stocks that I'm looking to buy going into this new life cycle of consoles. And so the first thing I want to talk about, this isn't a stock that I wanted to go over, but at this point there seems like there's an ETF for everything. And yes, there is a video game ETF. So there is the esports and digital entertainment ETF with the ticker symbol NERD, N-E-R-D. It has super low volume with only 47,000 shares traded per day, but I just thought it was really funny. Also, I want to say that I feel like I'm pretty qualified to talk about this topic for video games. I would consider myself kind of a video game nerd. I've been playing video games forever. My fish is named after a video game character. So I think I have some credibility when it comes to this. So the first stock I wanted to talk about today is going to be Take-Two Interactive, ticker symbol TTWO. And currently it's trading for $159 and it's up 29% on the year. And so Take-Two is the company that has mainly their two brands that they make games with is going to be Rockstar and 2K. Since 2012, Rockstar has only released 3 games with Red Dead Redemption 2, GTA 5, and Max Payne 3. And then the LA Noire game that you can see on the graphic right now is just a remake of an older game, so I don't count that. So this is a company that, when it puts out games, they're really solid games and they stick around for a long time, but they don't put out games very frequently. And then when you look at 2K, they have a lot of pretty solid titles with Borderlands, BioShock, Sid Meier's Civilization, and then they have their yearly releases of NBA 2K, WWE, and now they have a new golfing game, which I've heard was not that great. But looking at their last earnings report, it was actually really good for them. While they missed on revenue, the company had great outlook that pushed them up after their earnings report after hours. At this point, I don't think singular earnings reports are that big a deal if they have a pretty significant miss. I think the outlook, especially coming after the pandemic, is the biggest thing to look at, because that is kind of how the company is feeling about themselves going forward. Yes, you can have one miss when it comes to earnings, but that doesn't define a company going forward. So the guidance, the fact that they raise their guidance, looks fantastic. From the charts, I see some pretty interesting things. It is kind of in the middle of two zones, and we recently had a double top, and there is a very nice support at around the $139 mark that I have an alert set. And based off of how the company operates, the fact that they're up 29% so far in 2020, their high outlook going forward, if it does reach this area, I will 100% buy into the stock. This seems to be a company that does very well. I don't personally love any of their game franchises out there, but a lot of people love it. GTA 5 still brings in a lot of money for the company, even though it was released in 2013. And at that point, I was making video game videos. So I've come a long way since then. And while Take-Two Interactive is not one of my favorite companies out there, I think the stock is solid, outlook is great, and there seems to be a great buying opportunity at $139. So let me know what you guys think about Take-Two Interactive, ticker symbol TTWO, in the comments section down below. And so we went from Take-Two, and now we're going to be going to a company that has not the best outlook going forward, and that is going to be EA, ticker symbol EA. Currently, EA is trading for $118, and it's up 10% on the year. And so this is pretty much the opposite of Take-Two. They had decent beats on their earnings report for this past quarter, but their forecast going forward for the next quarter and year was pretty brutal. The big numbers from that last earnings report was a net income of $185 million compared to $854 from a year ago. So that's a huge drop. They did announce that they're going to start paying out a dividend, which is always a good sign for an investor. And they are starting a share buyback program that will have them spend around $2.6 billion over the course of the next 2 years. Looking at the charts, it does look pretty nice. It is bouncing off a very nice support, and if this was a stock that I really liked, I would consider this a buying opportunity right here. Unfortunately, the stock and the charts are not the only thing that dictates if I want to take a position. And unfortunately, EA and their product line, not some of my favorite things in the world. And so for someone that has ever played video games, I think it's a pretty general consensus that EA is considered the worst video game company out there. I found an article naming them the worst video game company back in 2013, and then they won it like 5 years in a row, and then here's a bunch of YouTube videos talking about pretty similar things. And so when I talk about buying stocks, I always think it's important to buy into a company that's at a discount. It's a company that you trust, and then you think has a bright future. And while the stock price, with the price action looks pretty solid right now for a buying opportunity, yet EA, not the best when it comes to their products, and it's not something that I really believe in. And just to give you some examples of that, one of their most recent game releases was Star Wars Jedi Fallen Order, and that is considered one of the most buggy releases of all time. And it seemed like, I watched my roommate play it for a while, it seems like it was released like 1 year too early. Decent game, but then their Star Wars Battlefront games that they've been putting out have been absolutely horrendous upon release. Some of the lowest rated EA games in a while, and those have been pretty bad, some of the worst reception I've ever seen for games. And so as I mentioned, when I buy a stock, I want to trust their product line and the trajectory of the company going forward. They just cut their outlook. While they do have the positives of the share buyback program and the dividend, it's not enough for me to consider buying the stock at this point. Will the next generation of consoles help them? Probably. It's going to increase the demand for different video games, and some of these franchises are well known. I think a lot of people will just buy Star Wars games at this point because of how popular that franchise is. Doesn't mean they're great games, but it will bring in money for the long term. And so they did strike a deal with Microsoft recently to include EA Play, which is kind of their video game library as a streaming service that goes on with the Xbox Games Pass. And as a result of that, I have been playing Star Wars Jedi Fallen Order, but it's not enough for me to want to buy this stock. So let me know what you guys have to say about EA in the comment section down below. Next stock is a company that I've never actually talked about on this channel, which was kind of surprising. Someone recommended it in yesterday's video, and I kind of went through my catalog of videos, and I was like, wow, I've never talked about this. But today we're going to be talking about Sony, ticker symbol SNE. And currently Sony is trading for $88.40, and it's up 30% on the year. From the last earnings report, they had some great numbers that came out. They saw an 11.5% increase in their game segment, 5% increase in music. They lowered their overall cost by 2%, and they increased their revenue expectations. Based off the next generation of consoles coming out for the PS5 tomorrow, they increased their outlook and their income guidance by 57%. And for a company as large as Sony, that's a pretty big move to the upside. So the guidance looks really good. After the earnings report, one analyst came on to CNBC saying that he has put Sony as a buy rating and has set his price target 50% higher than the current price. That is a big increase in a price target and makes me feel very bullish. And with the PS5 coming out tomorrow, this is a pretty exciting time for Sony, and it'll be very interesting to see who's going to win this generation of consoles. It might be a bold statement to say this, but I do have my own opinions. But it seems like every year or each generation of consoles kind of flip-flops between which one is much better than the other. When I look back for my pretty much entire video game career, I'd rank the PlayStation 2 over the original Xbox, the Xbox 360 over the PS3, and then the PS4 over the Xbox One. So it'll be interesting to see when everything comes out to see which one is considered the superior console, because that'll probably dictate how quickly the revenue is going to fall off from these console sales, but we'll have to see. Looking at the charts, it is very attractive. No crazy moves in any one direction that has to be determined why it moved this wildly. And so that makes me feel very good. It has a track record of reliable gains. And while this isn't a company to buy exclusively based off of their video games, the chart, the company, their increase in guidance seems very positive going forward. Here's the breakdown of their revenue, and as you can see, there's a lot of segments that bring in a lot of revenue. So it's not only a video game company, but this boost in demand for video game sales is definitely going to help the company going forward. So I really like Sony as a company to buy going forward, and I'm very curious to see what you guys have to say about Sony, ticker symbol SNE, in the comment section down below. And next up is the company that I've kind of dreaded talking about is going to be Gamestop, ticker symbol GME. Currently, GameStop is trading for $11.50, and it's up around 90% on the year. It did have some unfortunate timing with the last time I talked about GameStop, where I'll link that above right now if you missed that, where I released a video like 20 minutes after major news came out that pushed the stock up significantly. And a lot of people in the comments were like, why didn't you talk about it? And it's because I record videos in advance, so I was not prepared for that. And considering how long it takes to go from writing the videos, rendering, editing, and uploading, I had already worked on that video like 2 days before that. So I'm not going to give a full breakdown of GameStop. I am going to talk about the news from that that I missed from that past video, and just kind of give my overall views on the company. If you want my full analysis of the company, you can watch that other video. But in that news from October 8th, it was announced that GameStop and Microsoft have entered a multi-year strategic partnership together. From that, GameStop will use Microsoft Business's operations in their more than 5,000 stores, and all of their employees will be using Microsoft Surface devices. And in return, GameStop will get a cut of Xbox game sales. And so they are going to get money from all digital sales made on the consoles, including full games and DLC. At this point, we really do not know what percentage of a cut they're going to be getting. For a company like GameStop, this is a very positive thing in the short term. I don't really understand why Microsoft did this personally, but it is definitely a boost to GameStop. But until we see what the numbers that come out from the next earnings report, I'm not really changing my tune on GameStop as much. I think this is a great short-term boost, but they still have a lot of problems going forward. There are three main consoles when you think of Xbox, PlayStation, and whatever console Nintendo has been putting out. So recently it's been the Switch, but they'll probably release one in the next couple years. And so having to deal with Xbox is definitely a positive thing, but it doesn't solve all their problems. It's only like 1/3 of the market. And so I think they're too reliant on their physical store locations, having around 5,000. The switch to digital is going to be hurting them in the long run. And while this seems to be, it kind of feels like you're in a boat that has a hole and they've kind of plugged it a little bit, but now you have there's more than one hole. And so GameStop has problems going forward. This is a short-term solution. This is not a stock, if I ever bought it, I would only hold it for like 3 to 6 months, maybe until the next earnings report, but long-term, I'm still very bearish on the company. And I'm very curious to see what you guys have to say about GameStop and how that last news report that came out with the deal with Microsoft has changed your opinion on GameStop in the future. So let me know in the comment section down below. Now we're going to be talking about a stock that I've never talked about a stock like this. We're going to be talking about Nintendo of America, which is an over-the-counter stock with the ticker NTDOY. An over-the-counter stock just means that it's not traded on the major US stock exchanges. And so you are still able to buy and sell it from most of the major brokers. You are allowed to do it through TD Ameritrade, but that does include a $6.95 commission because it's not as simple as just going to the New York Stock Exchange. So currently Nintendo is trading for $64 and it's up 29%. From the last earnings report, Nintendo saw an increase in their forecast by saying that they expect to ship 24 million Switch consoles compared to the forecast of 19 million. Their operating profit outlook increased by 50%, but the stock did fall this week. Just kind of some poor timing where the earnings report came out at the same time as the vaccine news. So while they had some good outlook going forward, the vaccine news pulled down all of these stay-at-home stocks, which includes Nintendo. So I'm not really worried about that. Usually if you see good earnings and the stock falls, it usually means that the way they said something did not sound good to investors, but didn't really have anything to do with that. Looking at the charts, this is the first time it's dropped below the 50-day moving average, which is going to be the pink line, which is considered a bearish move. At this point, I don't really know how I feel about it. The 50-day moving average is not something that I trade exclusively based off of. But going forward, I think I really like Nintendo stock. They saw a doubling in net sales in the quarter that ended in June. They saw a 541% increase in net profit per share. And then they've been seeing a significant increase in their digital sales percentages. And so as someone like Nintendo, that is very good for them considering they're selling the digital products. Bad for something like a GameStop, but we've been talking about how this has been going on for a long time. And since Nintendo is the one that's going to be able to sell the digital games, that's going to be increasing their profit margin going forward. So as I keep saying, game sales have been consistently moving more and more towards digital, and that's going to be a good thing for Nintendo because they can take more advantage of that. Nintendo is one of the few loved game companies out there. There's not many people that have bad things to say about Nintendo. Maybe that just the games in the past were a lot better, but I think Nintendo is a beloved company and it's something that I would consider owning in the future. It does spook me a little bit just because I've never bought an over-the-counter stock, but based off of the price history, the outlook going forward and the products that they put out, I'm very bullish on Nintendo. Ticker symbol NTDOY. Let me know how you feel about Nintendo in the comment section down below. And then the final stock on this list is going to be Microsoft, ticker symbol MSFT. Microsoft is currently trading for $216 and it's up 37% on the year. Similar to Sony, I don't think anyone should look at Microsoft and buy it exclusively based off of the next generation consoles that are coming out, because their business is just so much more than that. When you look at this graph, the Xbox sector of their business is the 4th highest revenue producing segment, which is significant, but it's not something that's going to make or break the company. As you can see from that line, it's been pretty steady since around 2008. So this is a nice part of their business, but I would never buy Microsoft just because of the next generation consoles. Microsoft is a company that I would buy because they are fantastic, they are so reliable, and the breakdown of their revenue sources is just so attractive. And so Microsoft is always going to be a buy in my books. I am a shareholder of it, and I'm a proud shareholder, and I'm looking to buy more in the future. So yeah, that was my discussion of the video game stocks to buy. If I had to talk about I'll go through a list one more time. Take-Two, I would put as a buy rating. I'd put EA as a never touch with a 10-foot stick. I'd put Sony as a buy. I put Gamestop as a maybe buy in the short term, and then not touching it for the long term. Nintendo I'll put as a buy, and Microsoft I would put as a buy. It's going to be an exciting time for video game stocks, and I think we're going to see some nice boosts in their earnings reports in the upcoming quarters. Especially if we go back to more lockdowns, these are stay-at-home stocks that are going to do very well. I did not talk about Activision Blizzard. This was a stock that I talked about in yesterday's video, and if you missed that, you can go back to that video. This is one of these stocks that I love to buy going into the holiday season. They've done so well with stuff like Call of Duty. They have 3 franchises that bring in more than $1 billion in sales annually with Call of Duty, Candy Crush, and World of Warcraft. So they have plenty of great revenue sources. Activision Blizzard is always going to be one of my top stocks, but I did not feel the need to go in depth on it in today's video. So let me know what stocks you guys are watching going forward. I appreciate all the support, and I will see you in the next video.